Alright, what's good? So today is Friday the 9th of May, post-trade recap session for the wrap-up on the live trade. So took four positions today, and I think the reason why I'm touching on this first is going into today's trading session, my main priority and main focus is trying to get optimal entries, and obviously coming from the strategy where we leave stop losses absolutely massive and we don't even determine it until price actually prints structure, it basically means that I'm voluntarily allowing myself to get into drawdown on wick entries. Typically, what I would do, as you know, is on a 4 hour candle open, if I'm looking at decision areas, I'm going to take a wick entry. In this certain scenario, actually, in this price, I would have actually come out in profits. So 4 hour candle open, which is here. So the candle closed bullish. I was expecting price to come down for a bottom wick, which you did grab. So as price did come down for a bottom wick, I was expecting to see typically a wick entry here. I'd normally just take a buy right here at 2.9. But what I've been seeing lately is when I keep using that as my entry point, I would still see price kind of plummet further, and that's just voluntarily allowing me to get into more drawdown, which is something that I'm trying to mitigate. So what I've been focusing my attention on now is looking for price to actually print me a support confirmation on the 5 minute or the 1 minute before actually entering the market. In this specific scenario, what you had was the 4 hour candle closed you right here. You got the top wick first at the decision point, so you started creating the bottom wick that I wanted initially. And at this point, I said, right, you're starting to print that support zone right at the 329 level, which is where I would initially want a 4 hour bottom wick to be. Now, as price starts printing you bullish, because now I'm using range 2 as a confirmation, which you have here now, what I do is wait for the closure to happen above range 2 and then get the bottom wick retest. So this is exactly where I entered. This was a new 5 minute candle, which opened up. And as the 5 minute opened up with the bottom wick getting that retest, I took that buy position at 331, anticipating price to come up to flip bullish here, which I believe you got on the same candle. No, you got it on the next candle. So as price came down for the bottom wick, I wasn't expecting this to come down to 2.9, but since you still closed back in the range or closed above the decision point, I had to wait. And as you got the next closures, no bottom wick indicates lack of range to the downside, therefore had to wait. Next candle open, printed bullish structure, great, cool. Now I'm trimming my stop loss to the break of this low, knowing that if this current candle or the next candle comes down to break this low, price is most likely going to continue the momentum drive down for an even steeper 4 bottom wick. Also, reference, the 4 hour does have a top wick, as noted when price opened up for the top wick here first to grab orders from the decision point as a resistance to reject. So as price came up, I'm looking for price to continue. This is my original position idea. 49 pips with a 27 pip stop loss of 1.78. It's okay. It's considerably better than what I had before, right? So as price continue to come up, this is the 5 minute candle close. You'll be able to see it here. 5 minute came down for the bottom wick. Now on this candle closure, this is now no longer my original trade idea. What my original trade idea was this 5 to flip bullish and drive you up. So as the next 5 minute opened, it opened up with a top wick first, as you can see here on the 1. So as it started printing you that top wick, I exited my position out for about plus 9 pips. Now, here's the deal. This original trade, let's say if I don't set stop loss to break even so quick, or if I don't cut my position as soon as possible like this, price continued to rally up because you respected the range 2. This is where you could say you could potentially look for another position entry once range 2 got retested again. Take a bottom wick entry somewhere here on this current candle when you got that bearish closure above range 2. But there is no guarantee that price will continue to drive up. My initial entry was based off of that 5 minute bottom wick, and since you failed to drive, this current 5 minute closure bearish tells me as you get that top wick, I'm trying to exit my position because the probability of price on the 5 minute breaking the lows to come down is very high. So I was anticipating price to print you bullish up and then come down for that bottom wick, which you did grab. As you started rejecting, I'd be out of this position already because I'd be either break even or closed full. In this case, we closed full with a win. Had I let it rock, I would have hit full TP. This is the question I'm trying to ask myself now: is how am I allowed to basically give myself the highest probability of a trade having a runner? So I understand why I normally exit on a top wick, but now what I'm seeing recently when I've used a stricter and more aggressive stop loss is price will continue to drive up. So I don't have to be afraid of my stops getting hit anymore, because yes, they're aggressive, but also I'm cutting it at the most logical position possible, and I'm cutting it at the earliest place possible for price to continue down. I could have kept this position and this would be a win. I'd most likely trim my position at 332 areas, set stop loss to break even, and potentially trail my position, and that would have come out on top, right? So that was the first position. Not really concerned about anything else aside from adapting this. All right, so this is the second position we took. I'm going to be completely honest with you. This was absolute shambles from the get-go. Before I even entered the position, this was shambles. So what I typically do is, we know that any candle closing no top wick, you should never trade the bottom wick entry of the next candle open, right? I went against that rule today. Now, that can be because I was very fixated on adapting and introducing new experience to range 2 breakouts, which, as you can see here, I marked out range 2. I was anticipating the bottom wick here to actually give me the flip, minimum get a retest to 340, right, which tells me I can set stop loss to break even at this point, get a risk free, get all the risk off the table, so the next time you re-break the low, you're coming down. That was the impression of the trade when I went into it. And then obviously your runners to targets is 345, which now you have tapped. So the reason why this trade is not something that, like when you take a loss, it's fine. I'm agitated at this loss because I moved my stop loss after I determined it and whilst the trade was playing out. So I took the trade off of the 30-minute, the 15, and the 5 bottom wick entry, anticipating price to come up. I just explained that. And as you started getting into drawdown, I was like, right, I got to manage this position. So what's the first thing that you can do in order to trim or in order to manage? Have a 5 closure above the decision area. Perfect. You got that. The next 5, you look at the 1 minute, because I always manage it on the 1 minute time frame when I'm in drawdown, is looking at where price closes. You first got the closure below here, so I mentioned to myself in the clips, you would see it, is, right, you got the closure below. What's the next thing? It needs to break structure, so that means your stop loss placement is now going to be below 334. Again, fine, your initial stop loss is below that range. Don't have to manage anything. Started getting closures above. This is the point where I was like, right, we need the drive on this current 1 minute. You got the drive. This was your first opportunity to actually exit the market break even, right? And this is the worst part. This is the 5 minute open top wick first. Or you had a small bottom wick, but you failed to tap 336 first. And you kind of got like the bottom wick at like 0.93, came up, gave you that tap. I was expecting price to re-break my high. Unfortunately, you didn't. And that was the first opportunity to get out of the market. Unfortunately, I didn't take it. So then price flipped bearish, came back down, closed back below the range. Then I was like, fine. Next 1 minute needs to print me bullish. You didn't get that. So, as you can see here with my initial stop loss, I would have been stopped out my position for a net minus 57 pip loss. No problem. What I did was move my stop loss back to my original placement, where like prior trades I would take is around this area, minus 106, minus 110 pips, right? Price then gave me the closure above. I was like, okay, I'm feeling a little bit more confident. Had the drive up, I was like, okay, right, now I need a closure above here. Unfortunately, price didn't give me that. You started ranging. This was another breakout where I was like, right, price must flip for me to take any form of like management in this position. I'm not looking at dollar cost average into this position since I'm in drawdown. Or I'm in a trade that still has closures below the decision area, and then price started closing you below. So at this given point, I understood the next time you re-break the lows on the 1 minute, the 5 minute, 15, 30, you're going to come down. Why? Because the 30-minute now, the 15-minute, and the 5 have top wicks. So the 30-minute doesn't have an advantage point to come back up to anymore, right? You've already retested the high. You've already retested the 30-minute flip, which tells me price has failed to drive in that specific direction. You must now need to grab orders and liquidity to the downside in order for you to come up. That's exactly what price did. So price continued to come down, continued to drop. At this given point, I understood that price is going to break the lows here and drive down. But for whatever reason, I said to myself, you've just got the closure right at where the wicks are. I'm going to remove my stop loss, right? And have an audible stop loss. So as price started printing bullish candles, I was like, okay, cool, this is moving in my direction. It's completely fine. Next candle dropped. I got the audible cue. And when I got the audible cue, I didn't close out my position just yet. I waited and hesitated because I was like adamant price is going to re-break its high to come back up. And it was only at that point where I saw price start to plummet and I closed it full right at this support level at 331. So the reason I'm mad, or the reason why I'm not satisfied with the way the position outcome was, is because my initial risk was 62 pips, right? My initial risk was here, 50 pips, all right? And then I was like, all right, we're going to readjust my stops. So 63 pips, an additional 13 pips, not too bad. And then minus 78 pips. So you've kind of just gone against your plan of cutting risk or cutting the loss of a position early, right? Because look, you've now risked an extra 28 pips on a position you were only meant to risk 50 pips, right? This is now going against what you're practicing, right? In the years that we've been trading, this has only happened now because obviously we're adapting to new stop loss placement, we're adapting to this, adapting to that. I'm still within the transition of trading price action, trading hard stops. This is the first time I've come into a disagreement with myself, right? We've been trading with a hard, aggressive stop loss for about 3 weeks, actually a bit more than a month now, I think, about maybe 5 weeks. First time this has ever happened to me. That's the reason why I'm like, cool, what happened? What made me do this? So going back to the drawing board with that, I'm just not satisfied. You ended up getting a liquidity grab here, which is another position we took here. But this was the worst position I would have taken because you weren't valid on the 5, 15, 30, 1 hour. Or you were valid in the hour, but you weren't valid on the 30 because of the no top wick. You entered with the bottom wick anyway. You managed to position fine. You move stop loss. Second mistake. Then you move stop loss again. Third mistake. You didn't set a hard stop loss. Fourth mistake. These things will happen. And no matter how seasoned you are as a trader, these things will still happen. It matters on how you adapt to it, how you overcome it, how can you improve. And obviously as a trader, you will know you learn from the mistakes that you make. So this is a very hard standing point for me to say, no matter what, even if you get wicked out as a liquidity grab, firm the loss because this is your initial stop loss. Or even here, this is your initial stop loss. You should be out of the position the minute price wicks out of that candle. Okay, so there's the position 2. Let's go over position 3. All right, position here 3 was very straightforward. We had the play of the hour closing bearish at 3 p.m. and price completely wicked us down, right? So as you got the bottom wicks coming down from that 1 hour candle close, I wanted on this 5 minute a bottom wick tapping the decision area at 3322. Unfortunately, didn't get that. That also led the 1 minute to just create some kind of range within the retest area that I wanted originally to be filled. During this time, I was like, fear of missing out. I was like, damn, I really wanted this trade, but I couldn't have gotten it. But you know what? As a trader, we stay true to who we are. We stay true to the colors. The amount of discipline off of the charts is the same. It reflects who you are on the charts. And for me, I'm very good at most of the time following my plan, following the discipline. So, like I said, today maybe we woke up on the wrong side of the bed. Maybe there was a trigger before the trading session, because I did watch a couple of trading videos on being trigger happy, ironically. So perhaps that could have played a role into today's outcome. But either way, I'm grateful for what we've achieved today, because the priority for me now is really aggressive stop losses. Today was still a very good outcome in terms of the value, in terms of what I'm explaining now. So this trade eventually did tap your decision area at 3322. You got that area tapped. You had a 1 minute close below, so I needed a 1 minute closing back above, indicating a support. Then you got the new candle open on the one and closed bullish. So as you got the next candle open, you got the bottom wick, you retested 3322. I didn't take a wick entry here. I actually wanted to get the rebreak of the high. So as we got the current candle flip, rebreak the high, we got into a position. My stop loss to break even is very aggressive. I treated this trade very, very aggressively, because I knew the minute you retap this area, the likelihood of you coming down to my stop loss, because our stop loss was very tight in this position, would be hit. And actually, you wouldn't have. But in the position, in the plan, I followed it to a T. Break even level is at range 2, set it to break even, immediately stopped out. Price came down, closed again with no bottom wick. This is an indication that I could actually re-enter the trade. So on the next candle close, I could have actually taken a trade here. The only thing I'd have to debate is the 5 minute and the 1 minute giving me a no top wick closure on the one, and that's the rebreak at a 5 to come up and break all the highs and then come up, right? So that was the only thing. Otherwise, my full position would be this basically here. So that would be my full position, 32 pip stops with a 60 pip take profit, and price would have ran. So yeah, you got your second retest on this rebreak at a high. You're most likely going to get the push. Unfortunately, I didn't have a bottom wick on this 1 minute, so I couldn't take the position. So there's position 3. It was actually really, really nice to have a trade like this, break even. But coming out from that loss, I was like, oh, I'm debating whether I should call it a day. But then I saw A+ setup. I was like, okay, I've got to take this. So managed the risk super aggressively, came out with break even. So I was happy with that outcome because we followed the plan. Cool. And the last position of the day was taken here on this current 30. So the 30-minute closed bullish above the range, this time actually printing me the wick that I wanted. So this is enough. As you grab the bottom wick on the 30-minute open and the 5-minute, I took the wick entry. So as price came down, I understood that now it's pretty decent for me to take a position. So you got the first 1 minute closure on the 5 bottom wick, close you in the range 336. So it came down, it failed to break. So as you got the closure, the next 1 minute bottom wick, I took the entry, and my stop loss was basically 5-6 pips because it was the rebreak of the 1 minute low. If this candle flipped bullish, which it did instantaneously, and then rebroke its low, I'd understand now you've retested the decision area at 336 to come down. So as price started breaking, you had the 5-minute, 30-minute flip, 338, stop loss to break even was right here. And then as you literally ran through that level, stop loss, I trailed to this high, or I trailed to a high of, I think it was this high. That made the most sense to me. And then as price continued to come up, we peaked around 52, I believe, 54 pips of profit. I trailed my position because I actually wanted this 1 minute to continue the push up, right? It was late session. You've grabbed all of the liquidity to the downside. So my assumption is price should run through this level. You got a closure towards the latest resistance on the 1 minute. Therefore, I'm expecting a small retest, right? And since you had no top wick closure, typically I'd close out my position. But because I would like runners, I'm utilizing now the use of trailing stop losses, which I never really have. I've always cut my losses very early, which is now why I'm trying to expose myself to challenge more runners and actually get a better return. This is the whole point of why I'm logging more aggressively now, is because I'm changing up the way I trade to better optimize the reward that I should be getting, right? Because most of the time I'm taking A plus setups, they usually run. But why am I not getting the returns? It's because I'm cutting them way too early, or I'm setting stop loss to break even way too early. So this is the new challenge that I'm trying to basically attack and try and basically master, or at least get a lot more experience in it. This was a very, very good trade for me. So we came out 28 pips on a stop loss, trail stop loss hit, as the 5 minute came down for a break even. And yeah, you would have been stopped at a break even and stopped out on your stop loss before price actually started creating a support again to then rally back up. And even then, this wouldn't really have indicated me for any form of positions, because the 5, the 15, the 30 didn't align for me at the given time, as well as I would have preferred a very steep bottom wick on the opens of these candles. So like the 4 p.m. hour candle open, I would actually like a retest down, grab liquidity at 334, re-break the highs, then form structure to come up. That would be much more favorable for me. So anything past 4 p.m. UK London session close, I don't typically take trades because you have less volatility, so therefore less drives, and my strategy is predominantly focused on identifying driving candles, so I spend the least amount of time in a position. I know this because I tell myself this all the time, but if I do end up deciding to publish this, people who are watching, you should now understand that actually for me, in terms of my strategy, in terms of the way I play my playbook and my positions, the longer I am in a trade, the more risk I am exposed to. Okay, because well, previously I didn't trade with a stop loss. Now I'm trading with a very aggressive stop loss. This can change, but as a scalper, I want to spend the least amount of time in the market as possible. I'm trying to identify the driving candles, such as this play, and then now taking all the risk off the table, free money, house money, and now I'm utilizing trailing stop losses. So this is great. We came out today, I think I netted minus 160 something pips across 2 accounts, and then now I'm only netting a minus 79 pips or 76 pips across 2 accounts. So risk management today, in terms of the entire day, in terms of all of the outcomes in the trades, good job, because it's very easy for me to come back from this loss now. So I've traded myself out of a pretty bad deficit from that second trade that I took today, which was against the plan. And that's the next step forward. So there's the trade recap. Today, again, showing up to the charts. Second position, we caught ourselves on a bad swing, and then we bounced back from it because we composed ourselves. The break-even position helped, and identifying new ranges, reapplying ourselves, re-locking in, dialing in the charts, and we managed to come out as a winner. Okay, so great job today, honestly. And if I do end up publishing, people who are watching, the outcome of the trading day in terms of monetary value, in terms of performance gains, doesn't matter. What matters is the amount of value you're taking away from the session. All right. Are you a better person than before in terms of your experience in the charts? Yes. Are you utilizing the mistakes that you've made today in order to make you a better trader in the future? Yes. Are you taking steps post-trade session to write down notes, to take action, to understand, okay, cool, how do you get better breakouts? How can you identify better driving candles? If you are doing the steps that suit you in order to make you become a better trader in your strategy, in the market conditions, you are doing the right thing. And that's, I guess, the message I am trying to portray or give out to every single one of you if I do end up publishing this, right? So that's it for the trading session. I may as well say it. I've been recording my live sessions for the past, I think, six months now, or even maybe a little bit more. And there is a lot of source in it. I may not publish the entire trade session because it's like 2 hours long, but I can take clips of what I say or the trade positions, the experience, the emotions from those trades, and I can drop the source down here. So do comment below if I do end up posting this, if you would like to see any of this, or if you like the value that I'm providing, and if I should actually make these recaps a little bit shorter, because I understand they can be very long-winded with the amount of waffling I do.